Welcome first year commerce students to exam tips and tricks channel. Today we will understand preparation of simple cash book. The format of simple cash book will be under debit side, date, receipts, ledger folio, amount. Under credit side, date, payments, ledger folio, amount. So various transactions are given. According to these transactions, you are asked to prepare simple cash book. Cash book is also one of the subsidiary book. There are various types of cash books. Simple cash book. Simple cash book is also called as single column cash book, double column cash book. So double column cash book is also called as bank column cash book, petty cash book. Petty cash book is prepared for recording petty transactions, petty payments, small payments. So these are various kinds of subsidiary books for recording cash transactions. Cash transactions can be either cash purchase, cash sales. So these cash transactions are recorded in cash book. Credit transactions always recorded in purchases book, purchase returns book, sales returns book. So in the previous videos we have already learned those subsidiary books for recording credit transactions. Credit purchase transactions recorded in purchase book, credit sales transactions recorded in sales book, purchase returns transactions recorded in purchase returns book, sales returns transactions recorded in sales returns book. So today's class we will understand how the simple cash book has to be prepared. If the firm receives cash, then it has to be recorded under debit side. If there is inflow of cash, then it has to be debited. If there is outflow of cash, in the sense for various payments, what is the amount expended by the firm, then it has to be credited. It has to be recorded under credit side. This is how various transactions has to be either debited or credited based on the kind of transaction made by the firm. So the first transaction 2024, cash in hand balance is given. So that is the opening balance of the firm. The firm has opening balance rupees 20,000. So it has to be recorded as balance brought down under debit side, because that is the cash in hand balance of the firm, which has to be debited as balance brought down. June 4th, cash received from Gopal. So the firm has received cash. It is very important to understand whether the firm has received cash or whether the firm has paid cash. So if the firm has received cash, then it has to be recorded under receipt side. If the firm has paid cash, then it has to be credited. It must be recorded under payment side. So the firm has received cash from Gopal. So Gopal, who may be the customer, so from whom the firm has received cash. So it has to be debited. It must be recorded under receipt side as 2000. Next, the firm has purchased furniture. The asset is purchased by the firm for cash. So it has to be recorded under credit side as furniture account. Purchased furniture rupees 10,000. For purchasing the furniture, cash is paid. So furniture account has to be credited with 10,000. Next, June 15th, sold goods for cash. The firm has made sales. So for cash, in the sense, as the goods are sold, the firm has received cash worth rupees 10,000. So there is receipt of cash that has to be debited. So record as sales account under debit side with 30,000. Next, June 20th, paid salary. So the firm has made the payment of salary maybe to the employees. So salary is paid, so there is outflow of cash, so it has to be recorded under payment side as salary with rupees 3000. Next, last transaction, June 25, purchase goods from Mohan for cash. So there is a purchase. It is not a credit purchase. If it is a credit purchase, then it has to be recorded in the purchases book, but it is a cash transaction. Purchase goods from Mohan for cash. So it is understood that it is a cash transaction. So goods are purchased. So purchase account has to be credited with rupees 8000. So this is how simple cash book has to be prepared. Now let's understand the entries, how it has to be made. So first, a record 2024 June 1st as cash in hand. So write 2024 June 1st cash in hand. As I said, it is a opening balance brought down. So always opening balance has to be recorded as balance brought down with rupees 20,000. So that is the opening balance. Next, cash received from Gopal. So there is a receipt of cash worth rupees 2000. So Gopal, as I said, may be the customer. So the firm has received a cash worth rupees 2000. It has to be debited. So Junaid purchased furniture. For purchasing furniture, firm has made the payment. So furniture account, that has to be credited worth rupees 10,000. Next, sold goods for cash. So 15th, the firm has made the sales of goods. So sales account has to be debited. The firm has received a cash worth rupees 30,000. Record under debit side. So June 20th, paid salary. So there is payment of cash for the salary. So salary account has to be credited worth rupees 3000. It has to be credited. Next, purchased goods from Mohan for cash. So once again, write the date as 25. Purchased goods from Mohan. So purchase account has to be credited worth rupees 8000. So goods are purchased for 8000. So these are various transactions. Opening balance under debit side, then Gopal's account under debit side 2000. Firm has received cash from Gopal 2000. It has to be debited. Furniture is purchased, so it has to be credited because cash is paid for purchasing the furniture 10,000. Sold goods for cash. So the firm has received a cash by the way of selling the goods. So it has to be, there is a receipt of cash worth rupees 30,000 that must be debited. Salary is paid for paying the salary. So 3,000 is paid, payment is made, which has to be credited. Purchased goods, once again purchasing goods, firm has paid cash to the supplier, Mohan, who is the supplier, worth rupees 8,000. Now it has to be closed. So all these transactions, that has to be recorded. So finally it has to be total, then closing balance has to be ascertained. So the total amount, that will be 20,000, 2,000, 30,000, so 52,000. So that is the total. So record 52,000 under credit side also. So it has to be balanced. Balancing in the sense a closing balance has to be calculated. So first you have to analyze which total is more. Here debit total is more, so the debit total is 52,000. Write the same total under credit side also. So from 52,000, as you deduct these values, 10,000, 8,000, 13,000, so that will be 21,000. So it has to be closing balance has to be calculated. and it has to be recorded as balance carried down. So that will be June 30th. So this closing balance has to be calculated at the end of that particular month. So that will be June 30th. So you must record that as balance carried down. So the closing balance will be from 52,000 as you deduct 18,000, 30, 21,000. So the closing balance will be, so that will be 31,000. Record that as balance carried down. So this is how you can close this simple cash book, by the way of ascertaining closing balance, and it has to be brought as opening balance to the next month. So that is balance brought down. Record that as 31,000. This is how you can calculate a simple cash book, or the simple cash book is also called as single column cash book.